Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Wednesday, January 17th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. Big picture, just a reminder, we came off of that targeted long-term resistance about a month ago. It was then in the mid 260s, now 256.06. It is our mid to long-term price ceiling, able to contain monthly, possibly quarterly buying pressures, and below which, as I've said, the 177.73 channel bottom remains in reach over the coming months, the next 2 to 3, 3 to 5 months. In fact, it was a settlement last week, last Friday, below this combination rising channel bottom speed line combination, 224.92 to 226.26, that did set up a 3 to 5 week sell signal. By the end of February, I think, is in reach 178.35, where we could bottom out into, possibly through, the second quarter and round back up from there. That is the big picture. So we still remain heavy into February trade below 224.92, expecting 194.07, that late October low from last year, over the next 2 to 3 weeks. And by the end of February, we can test 178.35, which is a significant support level, able to absorb selling on a quarterly basis, and we can round back up from there. Downside today, 212.18. Nothing more than Tuesday's low. Able to contain intraday selling. There's just not a lot in this area to hang your hat on. All the minor points have been carefully chosen. With present volatility, if we break or open today, I don't see opening, but if we do break today below the 212.18 level, we do have this high of the low of 202.80. That would be attainable and likely to contain session weakness. Now, that would be quite a sell-off, but given presently heightened volatility, not entirely out of the range of possibilities. And so breaking 212.18, yes, we've got 209.98 and 205.69. They're all carefully chosen levels. But in terms of the sort of stick your neck out and buy level, whether that's reining in a short position or going long, it is 202.80. We can get a nice bounce off of there into tomorrow. But under that scenario, I think we do, by Friday's close, actually test that 194.07 October low. This is a 2 to 3 week objective where we can double bottom into, possibly through next week, and from here rally back into the mid 220s perhaps over the following 2 to 3 weeks. Now, once again, though, it is a hold below 224.92 that does actually maintain where are you? This 178.35 longer-term channel bottom by the end of February, I think, is still likely. I was saying a couple of months, just a couple of days ago, but I think with the spike in volatility on Tuesday, you can amend that to by the end of February below 224.92 to 226.26. Now, for the upside, that's 224.92 to 226.26 area is your sellable resistance. It is the area below which there is nothing to be but short Tesla if your time horizon is anywhere from 3 to 5 days out to 3 to 5 weeks. Now, in terms of going long, we do have a set of descending line studies that are in the same vicinity all the way up to 228.92. You can see that here. There's a descending 1/3 speed line, the red line. There's a descending extreme channel top, this black line at 228.92. So it is a wide zone, exactly 4 points wide, 24.92 to 28.92 is your sellable area. If we close back above 224.92, but not above 228.92, that is kind of a wait until tomorrow. If you are a swing trader trading the 3 to 5 day out to the 3 to 5 week time horizon, because only today, for instance, if we close above 228.92, am I comfortable anticipating aggressive recovery? So it really is this descending channel top. Then as the week goes by and it drops and it continues to descend, it will then resume with this formation here at 226.26. But, right now, we'll just call it the mid to upper 220s. It'll be in the mid 220s on Thursday, so forth and so on. We'll just be showing you these numbers, giving you the exact price points every single day, as we always do. Bottom line, you're short as we move into February below 224.92. You want to exit that short position and even consider reversing if we close above 228.92. If we close today above 228.92, I do expect 241.82 within 2 to 3 days, 3 to 5 days or so. But overall, once again, if we close today above 228.92, I do think within 2 to 3 weeks at the very most, you can anticipate a retest of that long-term channel top at 256.06. So once again, closing above 228.92, if you're a 2 to 3 week swing trader, you're either out of position entirely or you are long, expecting what I would consider to be a bit of a counter trend rally up to 256.06. On the way up, 241.82 can contain weekly buying pressures, but over the following 2 to 3 weeks, 256.06 in reach, where we can top out through February, possibly into the second quarter, and fall away again from here. Holding below 256.06 once again maintains the possibility of the upper 170s over the next several months, which is now considered a probability, holding below the 224.92 formation. All right. Anything else to say? Last thing I will say, and it doesn't really need to be mentioned in this particular video because we're so far off, but if over the coming weeks we were to close above 256.06 by a required 1% margin, that is a significant buy signal into later year, anticipating this 352.43 rising channel top in the months to follow. 3 to 5 months at the soonest, could spill into later year as this formation is intersecting that by July at some point, by summer, with the 414.49 November 21 all-time high. I'm going to leave it at that for Wednesday's Tesla report. Please click like, share, subscribe. Check out wickedstocks.com for that 5-day free trial. You won't regret it. I'll be back tomorrow with Thursday's Tesla, and you have a great day.